Thanks for joining us today on Market Call. I'm Morella Fernandez. Rick Rule with us on the show, President and CEO of Rule Investment Media. He'll take your questions on natural resource stocks today. Here's how to reach us. 1-855-326-6266. You can also send an email, marketcall@bnnbloomberg.com. .ca, sorry. Hey, Rick, good to see you.
Nice to be with you. Thank you.
I was taking a look at West Texas Intermediate before I got in. It's back up at $99 a barrel today, U.S. How do you view all this volatility?
Well, this is an interesting circumstance. The last time I was on BNN, I talked about the fact that globally, the oil industry has underinvested in sustaining capital to the tune of about $1 billion a day. This doesn't become a problem until it becomes a problem. When the Straits of Hormuz got shut down, and 20% of world oil supplies, but more importantly, 50% of world export oil supplies got shut down. That reduced productive capacity meant that we had to begin rationing by price. I need to say, too, the high prices that we're seeing today are in anticipation of shortages. We have thus far, on a global basis, been able to maintain consumption of crude as a consequence of floating inventory and strategic reserves held in various countries. If the conflict goes on for 2 or 3 more weeks, you will see oil rationed by price. And that will be very scary. The numbers that you're seeing today, if the conflict goes on, are a mere harbinger of things to come.
And you think that change could come as quickly as 2 or 3 weeks from now?
I think so. There are some countries like Japan that have 200 or 220 days of supply. There are other countries like Sri Lanka and Pakistan that have a week's supply. The circumstance is that the price escalations that we've seen are anticipatory. They don't reflect actual shortages, but we're going to run out of strategic reserves and floating inventories very, very quickly if the floating reserves that are stored north of the Straits of Hormuz in the Persian Gulf aren't released soon.
Let's talk about outside of the immediate impact of oil shortages. Do you expect earnings for 2026 to be negatively impacted outside of energy stocks, of course, because of what we've seen already over the last 6 weeks, or do we need to see this go on longer for earnings to be affected?
Well, certainly what we saw in the aftermath of the Arab oil embargo was that higher energy prices acted as a non-governmental tax on other investment arenas and also on the consumer. They left less capital available for other sectors of the economy, and it proved to be very negative for the economy. It also contributed to the higher inflation that we saw in the decade of the 70s. To the extent that the crisis is prolonged, and I need to say I'm not a geopolitical analyst, I'm not suggesting that the crisis will be prolonged, but to the extent it is, I think that the potential for the shock in the economy and the shock to inflation is greater than people recognize. I'm not trying to be a harbinger of doom here. I'm not a geopolitical analyst. I'm not saying that people need to organize their life around that, but this is a contingency that people have to consider.
All right, let's take a quick break then. Rick, we will line up the first phone calls for Rick Rule of Rule Investment. Again, he's taking your questions on natural resource stocks. Here is the phone number to reach us, as well as the email address. We're back in a moment. Welcome back to Market Call. We are going to start right now with an email from Devin, a question today for Rick Rule. He says, please comment on and provide long-term outlook for Energy Fuels, Inc. Let's start there, Rick.
I need to say I'm a uranium bull for the next 10 years as a consequence of structural changes in the uranium business, and also as a consequence that uranium is the obvious winner from the Gulf conflict. Energy Fuels is unique in that they have permitted facilities in the United States. In other words, they don't need to permit, and they have increasing U.S. production. I am a bull on Energy Fuels over time. My preferred stock in the energy space is probably, however, the Canadian multinational Cameco.
Okay, so Cameco for a longer-term hold.
Yes, ma'am.
All right. There we go. Let's go to our first caller. Then Mary's on the line. She's in Burlington, Ontario. Mary, go ahead.
Hi, Morella. Hi, Rick. Thank you for taking my call. Rick, I'm wondering your opinion of Foran being taken over by a gold company because they're not a gold company. Do you think this will be good for Foran? Thanks very much. I'll hang up and listen.
Thank you for the question. So Foran does copper, zinc, and gold. What do you think of this deal?
Will it be good for the Foran shareholders? Absolutely. To the extent that copper, zinc cash flow can be revalued at the same cash flow metrics that gold enjoys, yes, for the Foran shareholders. For the Eldorado shareholders, I'm less certain. Traditionally, cash flows from base metals, copper and zinc, have been valued by the market at below average multiples relative to precious metals multiples. So yes, for the Foran shareholder, I'm not so sure for the Eldorado shareholder.
Interesting. Mary, I hope that helps you out. Let's go to Chris in Winnipeg with a question. Chris, go ahead.
Thank you. Rick, what are your thoughts on Aldebaran Resources? They seem to have published some pretty good drill results yesterday. I haven't taken your boot camp yet, so I don't know how to quite interpret those results. I was wondering if you could give some guidance on that.
Thank you for the question. Rick, can you tell us a little bit about Aldebaran? We don't really talk about very often.
Yeah, for people who are interested in development stories, particularly around copper, I think Aldebaran is a very interesting company. High quality people who I've known for 2 decades, a good deposit, a deposit that's progressing steadily, that seems to enjoy local community favor, which is important, and a company that I think will benefit from what I see as a very, very, very good 5-year outlook for copper. Note to listeners, I'm long Aldebaran, so I'm talking my own book.
Okay, so you know it and you like it, and it's got a long-term outlook that you think is positive.
Correct.
All right. Let's move on to Stefan then. Stefan is in Montreal, and he has a question. Stefan, go ahead.
Hello, Rick. I'd like to have your opinion generally on the Canadian oil patch, but I'm looking at 2 particular stocks, Baytex and Whitecap. I understand that they are a little different in terms of their dividend and what they're valued at. But would you go in at this price today, or would you wait for a pullback?
Okay.
Thank you.
I think we're going to get a lot of those questions, Rick, just because things have shot up and people want to know if it's worth chasing or not.
I need to say that I have been long the Canadian oils for quite some time because they were hated and out of favor, and I thought that the political risk was lessening. So I personally wouldn't enter those 2 names today because I'm so long Canadian oils anyway. I feel very, very bullish on Canadian oils, but I need to say that the Gulf conflict has changed the pricing with regards to Canadian oils. I was an unalloyed bull 6 months ago. But loving something at $60 a barrel is different than loving it at $100 a barrel. Your outlook, your near-term outlook for Canadian oils will be dependent on your near-term outlook for the resolution of the Gulf crisis. And I don't know how to forecast that. In terms of Baytex and Whitecap, I own a little bit of Whitecap. I own no Baytex. They are both fine companies in terms of return on capital employed. I would like to see both companies reduce their yields to shareholders and increase their sustaining capital investments and their new project investments. I think the period for increasing return to shareholders relative to maintaining your producing base is over. However, the Canadian equities markets and my good friend Eric Nuttall disagree with me.
Okay, so would you wait for a pullback considering where things are today? I know that you bought in some time ago, and so you've enjoyed the ride up. But what if you're thinking of starting a position?
That depends on the listener. If the listener is underweight energy, they need to get long. For people who listened to me on Bloomberg a year ago and have large positions in Canadian oil, they probably don't need to get long. They're already positioned, and the prices are up uniformly 50 to 100%.
But I'm saying if you're starting a new position, would you start one today?
If you don't have a position in
energy,
energy,
you would even start
yes.
one today. You wouldn't wait for a pullback.
Correct. If you don't have a position in energy, you need to get long.
Okay. Let's go to John on the line. He's in St. Catharines, Ontario. John, go ahead.
Rick, I take it from a previous answer that you're bullish on copper. I'm interested in Taseko Mines. They have a new project in Florence, Arizona. They've been commercially running for over a month. And if they reach full production, they'll be the 3rd largest copper producer in the United States. What say you?
Okay, thank you for the question. Rick, go ahead.
In the very near term, I'm concerned about the copper market. In the 5-year time frame, I'm very bullish about copper. With regards to Taseko, I see them very much as a second-tier copper producer. I like to see mines that are in the bottom cash cost quartile worldwide and the highest quartile in terms of return on capital employed worldwide. I note too that Florence is an ISR producer. So before I give Florence any particular credit, I need to see a couple quarters at nameplate capacity before I can value that asset. I need to see that asset work before I can assign it valuation. I know the people behind Great Basin. I've known them for 4 decades, high quality people, but the jury's still out as far as I'm concerned on Taseko as an investment name.
Why are you worried about copper in the near term?
I think that one outcome of the Gulf conflict will be that it will, at least in the near term, tip the worldwide economy into some form of recession. We're seeing weakness in the copper market now as a consequence of higher interest rates wreaking havoc, with copper speculators, which is to say holders of physical copper. And I think that we're seeing weaker worldwide demand for all kinds of inputs, at least inputs that aren't being transited through the Gulf, copper being one of those. So there's a dichotomy between my very near-term outlook, which is weak, and my 5-year outlook, which is extremely strong.
All right, let's take another quick break. We'll line up more phone calls and email for Rick Rule, Rule Investment Media. Again, taking your questions on natural resource stocks. Back in a moment. Welcome back to Market Call. Let's go right to the phone lines. Peter's on the line. He's in Sunridge, Ontario. He has a question today for Rick. Peter, go ahead.
Good day, Rick. I've listened to you for years, and I really enjoy your advice. My question today is on Wheaton Precious Metals. I own a 4% position already. I'm wondering at this point, should I add to it, or is there maybe another streamer that is kind of overlooked at the moment? Thanks very much.
Thanks for the question, Peter. I'd be interested as well in hearing other streamer ideas you might have, Rick, but let's start with the question as to hold, trim, what would you do with Wheaton at this point?
I would be a buyer of Wheaton at this point, which is saying something because I already own a lot of it. The knock against the streamers has been that the big transactions that built them were a thing of the past. But as Wheaton showed 3 weeks ago in its transaction with BHP, the big transactions are in front of us. Wheaton and Franco will be the prime beneficiaries of that. I have buys on both of them, despite the fact that they're premium priced relative to the rest of the gold market.
So you would be a buyer at this point. Are there other streamers, that you would recommend or look at today?
I love the whole space. Franco-Nevada, if you will, the bigger cousin of Wheaton Precious, I'm attracted to. OR Royalty, Royal Gold. I think the whole space will do surprisingly well over the next 5 years, because I think the way that we finance copper mine construction worldwide will include selling byproduct streams on their gold and silver, which means that the really big transactions that built the streaming business are in front of rather than behind the industry. And I don't think the market recognizes that yet.
All right, let's go to John then. John's on the line in London, Ontario. John, go ahead.
First of all, Rick, I'd like to thank you for G2 Gold. You called the G Mining takeover, and I traded that. Thanks very much. I own 4 other gold stocks, Agnico Eagle, Alamos Gold, both of which I'm keeping. And then Anglo Gold Ashanti versus IM Gold. Those 2 latter stocks, do you prefer either or both? Thanks very much, Rick, and thanks for helping me out.
Thanks for the question, Rick. Go ahead.
I don't have a favorite between those. Neither company exhibits the lowest cost quartile in the space. IM Gold is certainly the most improved gold story in Canada, having completed Cote Lake, but I don't have a favorite between those 2. And I should note to the viewers, I don't own either of them in my own accounts.
Do you think that he should look at either of them? You don't own them, but are they something you would think of dipping in at some point?
They are not companies that have appeared to me to be attractive relative to their competition. I am a gold bull, and I suspect that people will do well throughout the value chain in gold, but I wouldn't suspect that either of those companies would be in my top 20.
In your top 20. Interesting. Okay. Let's move on to the next caller then. Elliot's on the line. He's in Hamilton, Ontario. Elliot, go ahead.
Good afternoon. Strathcona Resources has done well. Given the current risk-reward, would you buy, hold, or sell SCR? Thank you.
Thank you for the question. Strathcona Resources, what would you do?
I like Strathcona. It depends on whether people have reasonable exposure to energy in their portfolio now. If they don't, Strathcona is a very, very good choice among Canadian oils. But it's really an individual proposition. For those individuals who are underweight energy, which is most of the Canadian public, this is a time that you need to increase your exposure. If you were prudent and you began to develop a portfolio of Canadian oil and gas stocks a year ago, you don't need to increase your exposure. It's as simple as that. It's a personal decision.
When you talk about holdings for energy, I'm wondering what your favorite mix is. How much gas, how much oil, that kind of thing.
It wouldn't hurt my feelings to see Canadians have 10% or more, slightly more of their portfolio in energy. Traditionally in Canada, oil and gas has incorporated about 4% of retail portfolios across the country. So for most Canadians, they are woefully underweight Canadian energy, despite the efficiency of the Canadian industry and the very high yields offered up. So for most Canadians, they need to top up their energy portfolio. For people who have been listening to me on BNN for the last year, they're probably already full.
Okay, so what about metals? Where would you land, gold aside, where would you land, for example, on copper? How much of a portfolio would you recommend people hold there?
I would like to see investors who are willing to do the work to understand metals markets have at least 5% of their portfolio in base metals. 3 years from now, I would probably like to see that number come up to 10%. We are coming into a period where, as a consequence of decades of underinvestment in productive capacity, that we're going to have to ration access to base metals by price. That's going to be a very different circumstance that we're in today. My suspicion is that we have a bit of an economic reckoning between now and then, so that there will be time to enter the base metals space. But make no mistake, 3 years from now, 4 years from now, base metals will be in the same place that oil was a year ago.
Let's move on then to Ron. He's our next caller today. He's in Calgary. Ron, go ahead.
Yes, hi. Thank you for taking my call. I'd like to get an update maybe on Mega Uranium and see if you're still positive on it.
Okay, thank you for the question. Tell me a little bit about Mega.
Mega is, in effect, a holding company. They have direct interests in uranium, but they also have shares of other uranium companies, in particular NextGen. I am really bullish about the uranium space for the next 10 years. I think there are fundamental changes in the uranium business that the market hasn't taken into account. Mega sells at a discount to the value of the sum of its parts, and I think each of the parts individually is going to become more valuable. Mega will require some patience because the market hates holding companies, so they will always trade at a bit of a discount to their net asset value. Investing in hated holding companies in commodities that have been coming into favor is something that has treated me very well for 40 years. And as a consequence, I'm overweight personally, Mega Uranium.
Good to know. Let's take a quick break then, Rick. We will come back with a look at Rick's past picks. That's next. Welcome back. We are going to have a look at Rick's past picks. These are from July 2nd of last year. Rick, at the time you picked EMX, royalty EMX on the TSX, which was acquired later last year. I believe it was in November by Elemental Altus Royalties. But let's have a look at the board and the money made there. 363 at the time you recommended it in July to 570. So 57% upside for return and total return. Is this something you put new money into last July? What made you recommend it at the time?
At the time, it seemed to me that EMX was selling at a discount to its peers while having a unique business model, the prospect generator business model, which allowed them to create royalties as opposed to merely buy royalties. I speculated at the time that the discount that it suffered relative to its peers meant that it was likely to be acquired, and that's precisely what occurred.
Okay, did you like that acquisition?
I do. I have added to my position in Elemental. I was a shareholder both of Elemental Altus and of EMX prior to the transaction. And post the transaction, I've added to my position.
Interesting. Okay, let's move on to your next pick from last year, Origin Royalties, another OGN TSX company for royalties, at the time at $1.51 on the TSX and now up to $3.35, so 122% upside. Same for total return. Is this one you've held onto? And I know you said you generally like the concept of royalty companies in the space.
Well, remember that Origin sold off an asset as we anticipated that they would and made a distribution. So this is a successor company. And yes, I have maintained my position in the successor. The Origin people are very high quality people. I was involved in the founding of the company many years ago. And so, yes, I'm absolutely still an Origin shareholder, and I expect great things to come from these people.
Interesting. Let's get to your next past pick then. Sprott was your third pick in July of last year. On the TSX, it was 92.89 July when you recommended it. It's up to 199.71, so 115% upside. 117% total return. Tell me, sort of maybe beyond the obvious, what led to the beat in this stock and it doing so well?
I should note for disclaimer that I am the largest individual shareholder of Sprott, a former employee, and a former director. My thesis then was that Sprott had become the brand name globally in financial services for natural resources and precious metals. Assets under management there have increased to in excess of $70 billion US dollars, which means that Sprott gives investors exposure to a whole range of funds and trusts. Rather than paying Sprott a fee to buy those products individually, you could own the parent company and get paid a dividend. This is a way to have diversity across a whole range of investment products in North America while still getting a substantial revenue stream by way of dividends. My suspicion is that if the bull market in precious metals and raw materials continues, which I believe it will, that the global financial supermarkets will decide that they need a natural resource silo. And rather than spending 5 years building one, they will simply buy Sprott. I believe 5 years from now that Sprott as an organization will cease to exist, that it will have been bought and subsumed into a major financial services supermarket.
Interesting. So you think that'll happen within a 5-year time frame is what you're saying?
I do.
Got it. Let's take a quick break then. Rick Rule with us today of Rule Investment Media, taking your questions on natural resource stocks. We're back in a moment. Welcome back. Let's go back to the phone lines for Paul on the line in Orangeville, Ontario. Question today for Rick. Paul, go ahead.
Yes, NextGen Energy. They just got their permits and they're ready to start. And someone suggested that being close to Denison Mine is probably will partner with Denison Mine to start the industry. And Denison has got a different technology. What do you think about that?
All right, Rick, go ahead.
If the question goes to NextGen, I'm a NextGen shareholder. This is the largest and finest undeveloped uranium deposit on the planet. The stock has taken a recent knock as a consequence of comments made about it by Cameco. My belief is that with the changes in the uranium market, specifically the introduction of term contracts, that NextGen might be able to build a deposit itself. And if so, contrary to popular belief, Cameco isn't the only possible bidder. BHP could be a bidder. Anglo-Teck could be a bidder. Rio could be a bidder. My suspicion is that a deposit of this quality will get either bought or built this decade, both of which will be to the benefit of NextGen shareholders. I'm a public critic of the general and administrative spending in NextGen. I will say, however, that they've done a wonderful job in terms of First Nations and Métis relations, and in terms of advancing the project. And this is, to my knowledge at least, the best unbuilt major uranium project in the world.
How important are those relationships you mentioned?
I think they're critically important. They're important morally, but they're important in terms of Canadian politics too. NextGen now has spent a decade in rural Saskatchewan coming to understand the needs, the real needs, not the perceived needs of Métis and First Nations people. This has not been a box-checking exercise for them. They have actually engaged, and I have reason to believe from local sources that they've done a good job engaging with that local community, which is critical. They are literally our hosts.
Let's go to the next caller then. Mike is on the line. He's in Edmonton. Mike, go ahead.
Yeah, hi. My question is on West Red Lake Gold Mine. If you like the company, and would you be a buyer at these stock prices? I'll hang up and listen to you.
Thank you for the question. Rick, how big of a deposit is there in West Red Lake Gold Mine, and how much do you expect from this company over the next 5 to 10 years?
I am a small holder of West Red Lake. I like the people. I like the Abitibi. I like the West Lake District. I am loath to invest in companies that build mines without feasibility studies, which is what West Red Lake has done. I want to see 3 or 4 quarters of operating results in this mine because I don't have a third-party study to benchmark against. So I'm an owner as a consequence of my fondness for the Abitibi and also my fondness for the financier behind the company, Frank Juster, whom I've known for 4 decades. But I'm afraid of the fact that they built the mine without a feasibility study, given the past track record of that mine for failure.
How often does something like that go ahead, building without the feasibility study?
Too often, in my opinion.
It sounds risky. That's why I'm asking.
When the market allows it, people seem to be willing to shortcut the 2 or 3 years it takes to do third-party independent feasibility studies, thinking that they know enough about the deposit or having enough faith in their ability to change things on the fly. And there are times when that really, truly comes back to bite people. I'm always afraid of it.
I was going to say, historically, does it err on the side of being successful or not successful?
Not successful.
Okay. Let's move on then to Roger on the line in Surrey, BC. Roger, go ahead.
Good morning. Thanks for taking my call. Rick, I'd be interested in your comments, please, on Hudbay Minerals. Thank you.
Thanks for the question.
I think.
Go ahead.
I think the whole base metal space does well over 5 years, perhaps does poorly over 6 months. My criticism of Hudbay would be that I see a dearth of Tier 1 deposits in Hudbay. I see a whole bunch of Tier 2 deposits. I define a Tier 1 deposit as a deposit which is world scale in terms of size, but also in the bottom cash cost quartile worldwide and the top return on capital employed quartile worldwide. I like the growth that's built into Hudbay. I like their renewed focus on a laramide, which is to say Arizona-based advancement strategy, but I do not own Hudbay as a consequence of their cash cost performance and their financial performance.
That was for Roger. Let's move on to the next caller, Dan in Cochrane, Ontario. Dan, go ahead.
Good afternoon to you both. Rick, Canada Nickel Crawford Project. Thank you very much. Have a great weekend.
Canada Nickel.
Very high quality guy, very large deposit. I'm concerned about grade. I love the sulfide nickel business. I understand their thesis. I understand political security. I don't own it. I like higher grade sulfide nickel deposits. This will make me very unpopular in Ontario. I like the people a lot, but I don't own the stock.
How needed is nickel in the build out, if it is?
I think nickel is one of the unsung stories. The nickel market is in disarray as a consequence of lateritic nickel out of Indonesia. Many people don't understand the environmental consequences of making that lateritic nickel, but they're serious enough that the mining industry in Indonesia is incurring the disfavor of the Indonesian people and the Indonesian government. The consequence of remediating that is that the cost of producing lateritic nickels go up. Also, lateritic nickel is extremely energy intensive, and the recent increase in oil prices will have a very negative impact on lateritic nickels, which will increase the cost to produce them, and as a consequence, provide some pricing headwind for sulfide nickels worldwide.
Let's get to another caller then before the break. Billy's on the line in Toronto. Billy, go ahead.
Hi, happy Friday. Thank you for taking my call. Curious to know your thoughts on Revival Gold. Do you like their assets? Do you consider them a takeout target at any future points? What do you think?
Thank you. Thank you for the question. The Revival has a project in the U.S., so Idaho and Utah?
I'm a fairly large shareholder of Revival. I'm a personal friend of Hugh Agro, who runs the company. These are development stage assets which carry risk, but I think this company is worth a substantial premium to its current share price. And I suspect that as they continue to de-risk the projects, particularly the Merkur deposit in Utah, that either the market will take the share price of Revival up, or some other developer active in the western United States will take the company over. I consider it to be speculative, but I consider it to be a very good speculation, and I'm personally long.
Let's take a quick break then, Rick. We will be back with more phone calls and emails in just a moment. Welcome back. We have Rick Rule joining us today to take your questions. We're going to an email from Jeff. Could you please give me your opinion on Vizsla Silver and might it recover from the tragic events that took place around their Mexican property? They had a number of their workers kidnapped and confirmed that last I heard 9 were dead and 1 was still missing. So a really difficult time, of course, in the Sinaloa state where their mine is located. What do you think, Rick?
I'm a Vizsla shareholder, I need to say, and I'm a close friend of the founder, Craig Perry. I am not buying additional Vizsla until I see some resolution of the dispute that they apparently have with one faction of the Sinaloa cartel. I've spent time in Sinaloa for the better part of 3 decades. It's a very difficult place sociologically, and while Vizsla has done wonders for the local community, there are disputes in Sinaloa between 2 different factions of the Sinaloa cartel that Vizsla has no control over. The consequence of that is until I see some evidence of a resolution, I can't buy more stock.
Interesting. So how long have they been in the region? You said they've worked with the community there. How long have they been there?
They've been there 5 or 6 years. It's important to note that they're in a fairly remote part of Sinaloa State, and they are in a part of the state where the entire economy has been driven by narcotics. They're in a rough part of the state, which is why the deposit was undeveloped for so long prior to their exploring it. economic transition in the local community as a consequence of the advanced exploration development efforts of Vizsla has really been transformational. And what has happened to them is really a function not so much of their own interaction in the region, which has been good, but rather factional fighting between two surviving factions of the Guzman cartel in Sinaloa State.
Interesting. Okay. Let's get to our next caller then. Gordon's on the line. He is in Victoria. Gordon, go ahead.
Good morning. Is it worth buying 1,000 shares of Marin Energy with my fund money, and have the Lundins fully exited the stock?
Okay. Rick, go ahead.
My understanding is that the Lundins have exited the stock, that they don't want to be part of enterprises that they don't control. One of the things that bothered me was the fact that the Lundins were sellers. I've come to understand the nature of the Lundin selling, and I am no longer exiting my own position in Marin. This company is generating an awful lot of cash. I would like to see them, rather than distributing all of that cash to shareholders, begin to drill some of the low-hanging fruit that I see them having in Nigeria. Ironically, the only thing that bothers me about the stock is that they're being too generous with shareholders and not spending enough money drilling off what I see as extremely high-quality exploration prospects.
That was for Gordon. Let's go to Nick in Pickering, Ontario. Nick, go ahead.
Hi, Rick. Thanks for taking my call. As well, thank you for the G2 recommendation. I've done very well in that, so I thank you. My question's for Erdene Resources in Mongolia. Just like to get your opinion on the gold deposits there, what you see for it, and also the molybdenum, how big you think that is, and would you be a buyer at this level? I'll hang up and listen to you.
I am not a buyer of Erdene, not because I don't think they will do well, but because I'm mostly restraining my buying to companies that control or may come to control Tier 1 deposits. I see the Erdene deposits as Tier 2 deposits. I do see Mongolia as an up-and-coming country. A lot of sociological challenges there, a lot of political pressures around mining, and I do see Erdene as having the ability, if they exercise it, to become more active in Mongolia. But I do not own Erdene. I don't discourage buying it. It doesn't meet my own criterion.
When you say political pressure, does that mean the government is against, or are they looking for more profit sharing? What is the pressure there?
It's a country in transition. There isn't a lot of precedent with regards to Mongolian mining code, and there are, let's call it, discussions in the country about increasing the state's take with regards to mining, or conversely, making the jurisdiction a better jurisdiction for foreign miners to invest in. Those political disputes will need some resolution before we understand how safe it is for foreigners to invest in Mongolia.
Let's get to Walter then. He's on the line. He's in Chester, Nova Scotia. Walter, go ahead with your question.
Hi, Mr. Rulo. Thank you for taking my call. What I was wondering, my brother and I in Newfoundland, Andy, we're big supporters of Equinox Gold. I'm just wondering your opinion of Equinox Gold and the overall frenzy of drilling in central Newfoundland. Thank you very much for taking my call.
Thanks for the question. Is there a frenzy of drilling going on in Newfoundland?
Perhaps by Newfie standards. It's an interesting place to look for gold. There's some excitement there around what Equinox has obviously done with Valentine, and a separate level of interest in newfound gold. Newfoundland is a good as opposed to great gold province, but I suspect that, like any other region, it has its regional supporters. With regards to Equinox, that was a top pick of mine on Bloomberg some years ago when they were put into, in Canadian parlance, the penalty box as a consequence of a mine that was behind schedule and over budget in Ontario. That mine finally came into production and is beginning to generate cash, and it's worth noting that Equinox has now paid off $900 million in debt. They have a much better looking balance sheet, and I think Equinox is a company that will do well going forward. People who want to buy Equinox need to understand that it's a transactional company, and they need to be prepared for shocks like major acquisitions, and also like the disposition of their second and third tier assets. So if you're going to own Equinox, by the way, I own a lot of it, you need to understand that your rewards will be episodic and that the market will be afraid of some of the things they do. Those things, with Ross Beat at the helm, will work out over time.
Let's take that quick break then, Rick. We will come back with new picks from Rick Rule in just a moment. Join us on Monday for Market Call. Chris White will be on the show, head of research at 5i Research, and he'll take your questions on Canadian equities. If you missed Market Call, check out our daily podcast. Find it on iHeartRadio and other platforms. You can also watch full episodes on our YouTube channel. Let's get to new top picks from Rick Rule. We're going to start with G Mining Ventures, GMIN, on the TSX. What do you like, Rick, about G Mining moving ahead?
BNN listeners are probably tired of my recommending G Mining and the affiliate companies. I've been involved in this story for about 5 years. The Gignac family are long-term fixtures in Canadian mining and mine contracting. Absolutely first-class people in terms of building and operating mines. G Mining itself first put the Tocantino mine into production in Brazil on time, on budget, then took over a longtime favorite of mine, Reunion Gold. They're now building the Oko West deposit. Yesterday, they announced that they were consolidating the other part of that deposit, G2, a different pick of mine from BNN Bloomberg. And they have one more mine in the, if you will, on-deck circle. This is a company that buys projects, builds the deposits, builds the projects, and operates them. What I like about G Mining is that they are proven mine builders. They have a wonderful pathway to growth. They are in the best cost quartile in the world. The management team is young but experienced. And my suspicion is that if the market doesn't over time give them sufficient credit for their accomplishments, that their mines are of sufficient scope and scale that they will be consolidated by a larger player. I don't expect that to happen. I expect them to command a premium price in the markets. But if it doesn't, my bailout, my fallback position is the fact that they are already large enough and consistent enough that their assets would be of use to a larger competitor.
Let's get to your next top pick then, which is Dundee Core, DC.A on the TSX. They're a holding company. What is it you like about Dundee?
I think that Dundee is selling at a 40 or 50% discount to the value of its constituent holdings. I also am very fond of the management style. The lifestyle generally of the CEO, Jonathan Goodman. I did business with his dad, Ned Goodman. In fact, his father was a mentor of mine for many years. And I held the predecessor, Dundee Bancorp, remembering very well when it was spun off of Corona Corp at, if my memory serves me well, 60 cents, and watching the stock go over the course of that wonderful bull market to $40. I'm not suggesting that Dundee is going to do as well. But I think if you buy a well-run company at a 40 or 45% discount to net present value, that you will do well over time. And Dundee fits that bill.
International Petroleum is your third pick of the day, oil and gas. We know you like the space, but what particularly about International is there for you?
International Petroleum is a company that's generating all kinds of money now with a real clear pathway to growth, which is first of all fully funded and will increase their amount of free cash flow. They have very, very long-lived production, and they have adult supervision in the form of the Lundin family who controls them. My suspicion is that when that deposit is finally drilled out, because of the very long reserve life that it will enjoy, that the Lundin family will monetize their success, much as they did in Lundin Oil, which is to say, I think that you will do well in terms of share price and appreciation in dividends for 2 or 3 years. And then in the 3 to 5 year time frame, I suspect that the entire company will be sold to a premium bidder at a premium to market, and that bidder will then annuitize out those cash flows over time.
International Petroleum's up 725% over the last 5 years. So when I look at that, of course, it's jaw-dropping. But how much growth do you see for them ahead?
I'm sorry, I couldn't hear the last part of the question.
How much more growth do you see for them ahead?
Oh, you have built into the cake probably 45% production growth. in the next 2 years. And the operating performance of the company over the last 7 years has been absolutely stunning. They went from, in effect, pre-production to 45,000 barrels a day. It's been an absolutely spectacular performance. The deposit itself goes all the way back to, frankly, one of my first BNN recommendations, which was Discovery West Petroleum in the 1990s. So we've been around this story, Rick Rule at BNN, for a very long time. The story probably ends 3 to 5 years from now in the takeover by a very large Canadian company.
Got it. Let's leave it there, Rick. Rick, thanks for joining us. Appreciate your time.
Appreciate it. Thank you.
And thanks for joining us today on Market Call. We'll see you back here on Monday.